For over half a century, humans have endeavored to make business a force for good. But is the movement working? Or is it time to explore a new path forward? Welcome to Less Talk, More Action. We are your hosts, Joel Caesar and Owen Barrett, experts in clean energy, net zero real estate, decarbonization, and entrepreneurship. In each episode, we ask provocative questions and share stories from the front lines of sustainability with leaders in science, tech, and business taking real action to design a cleaner, better future. Thanks for joining the conversation. Now, let's get to work. Welcome to the Let's Talk More Action podcast. My name is Joel Caesar, the world's undisputed voice, building decarbonization. Joining me as always is Owen Barrett, the self-proclaimed world's smartest solar expert. Today's guest, Deyl Kearin, Director of Investor Success at DLP Capital, where he helps investors align their financial goals with purpose-driven real estate investments. Man, what a cool guy. Very humbling. You know, we like to joke around and mess with people, but this was one of those like uplifting, like, oh man, I need to be more like this guy kind of episodes, you know?
Exactly. I think everybody's going to come away from this interview being like, I got to be more like Deyl.
Yeah.
What would Deyl do?
That's a great way to say it. Well, I look forward to everyone hearing the episode. You're going to be inspired. It's really cool stuff that he brings to the table. But before we get into all that, let's dive into a segment we're calling Owen and Joel Go to Nashville. So when this airs, I think it'll be the week of the IMN ESG and Decarbonization Conference, which happens twice a year. This time's the winter conference in Nashville. You and I are veterans of this event. It's actually where I met Deyl at the Dana Point one, where we surfed. But this one's in Nashville, and we're going to do a quick bit here on, I think this was your idea. We're both going to do what we expect to be annoying from this conference and what might bring us hope for the industry of sustainability and real estate. So I'll let you go first. What do you got?
I think what we're going to start to hear with on the optimistic side, what's going to give me hope. I think all of this, what do we want? This 180 on ESG. No, but you can't say the word anymore. You know, people are replacing ESG with different words on their website and in their reports. I think we're going to go back to the basics. I think we're going to focus on projects that make financial sense. We're not going to do these wonky carbon offsets and rec projects. We're not going to do things that maybe would have been a stretch to see returns for in the past. I think we're going to get back to the basics. We're going to sharpen our pencil. We're going to do projects that are obvious and really should be done. And I think the industry is turning back that way. I think we got a little crazy, went a little astray for a while there, but I think we're going back to the basics. What I'm going to be annoyed by is, well, I do think we're transitioning, I don't want to say away from reporting, but I think that a reporting fatigue is building. I still think there's going to be a lot of focus on reporting. Like, I don't think we're fully there yet, but I think the momentum is shifting against reporting. So I think I'll still be annoyed by it, but we're going the right direction.
Okay, that's a fair answer. I'll be quick because I'm just going to go on the annoyed part. I'll just like tag on your hope around. I think more of a lean towards back to basics and doing projects that make money and how that also impacts the environment. I think that's a good thing. I think we'll see and hear some of that, but I guess that's related to the same thing I'm going to be annoyed by, which is as you and I are like both sort of penetrated in this market and talking to a lot of the people that'll be there on stage and speakers and such. It's like, we know the ones who are real and we know the ones who are full of shit. And I know I'm going to be watching people on stage talking about how they're making all these plans to take action. And they're doing all this cool stuff to get their projects ready. And I'm like, you don't do shit. I see you and I know you have hundreds of projects sitting on your desk that you should take action on. And you're one of those people who we know is actually someone who makes excuses and gets in the way of those projects happening. And I guess that's the nature of any industry. There's going to be grandstanders who we know are full of shit. But
the blessing and the curse of being well connected in an industry, right? And talking to people on a daily basis, like everyone puts their best foot forward at these conferences. No one's going to get up on stage and say, I can't get anything done within my organization. Although, I hear you. And that's definitely going to happen. I mean,
And
There's
also,
no way
no,
around it.
I proposed an idea for like sort of a provocative, different kind of session at this conference, and IMN shot it down. And I was
Really?
like, yeah, kind of. And
Oh,
whatever, it's their event. No, God bless them. But it's like, okay, so great, you're gonna show up with 10 or 12 or 15 of the same BS talks that we always hear about
yeah.
people talking about nothing. You're gonna be on one of them. Hopefully, yours is better. But it's like, come on, guys, let's try something different. Let's shake it up a little bit.
What was the idea?
I'm not going to say it here because I don't want to. I don't want to get
Oh,
anybody.
come on. Give me a hint.
It was sort of about like what this podcast talks about, and it was going to be more about lighting a fire under people's ass, about a culture of action, and like there's numbers, there's ROI, there's politics, there's capital planning cycles, there's realities of investment holds and cycles and the needs of being fiduciary, all those things I get, right? We're going to hear all that stuff. But then there's like, you and I know there's some people that lead organizations with a culture of, we're going to find ways to say yes and do things. And then there are others who have cultures of, I'm going to be the annoying analysis paralysis person who's always going to find a way to keep studying something so it actually never happens. And the talk was going to be a little bit like, how do you shake up cultures like that? So I think they might have thought maybe it was going to be harsh towards some folks that they like, and so be it.
Well, just another reason to launch the Let's Talk More Action Summit.
Yeah, or I mean, I saw your LinkedIn post about how you went to some affordable housing conference and they wouldn't let you talk, so you guys just set up shop in the lobby.
Yeah,
It's like an insurgent. It's like,
Yeah,
I wonder if
we're
maybe we
guerrilla
should just
tactics.
go to all these conferences and just set up Let's Talk Action booths in the lobby, just to call out the bullshit.
Yeah. So the first day we did that, I mean, we weren't the only ones that did this, but the first day, the conference had all these tables that were just taken over by vendors that weren't allowed into the conference. And the second day, they smartened up to it, and they made it so you basically had to be ordering food from the restaurant of the hotel in order to have a table. So I think they're aware of the scheme. But yeah, I mean, it's like these conferences at the end of the day are sort of all the same. Everybody gets up there and spouts about all these things that they're going to be doing, and we need something different. And I don't know. I mean, I don't know how we start that.
And as my marketing advice to my own company and your company and anyone else listening that goes to these conferences and tries to set up a booth and tries to host a happy hour or gets on a panel, in my experience so far at Cambio, and I'm just speaking for myself, maybe others would have a different opinion. I hear all the time about what brought us to Deyl. We sponsored a surfing event at IMN Dana Point, and I always hear everyone, "Oh my God, you guys are the ones who did the surfing at IMN." It's like it resonated so much with people as being different, as a way to connect in a different way. It's to your point. Everyone goes to these conferences and does the same shit. It's like, try something new, get people outside, try to connect in a different way.
Yeah. Well, see you in Nashville.
Well, see you in Nashville. And with that, let's jump into our conversation with Deyl Kearin. Joining us today is Deyl Kearin, Director of Investor Success at DLP Capital, where he helps investors align their financial goals with purpose-driven real estate investments. Deyl brings more than 20 years of experience in real estate, finance, and business leadership, having built and managed multiple successful ventures prior to joining DLP. Known for his commitment to integrity, stewardship, and long-term relationship building, he's also an adventurer at heart, having completed some of the world's most extreme endurance challenges, a testament to his discipline and drive both in life and business. So, Deyl, welcome to Let's Talk More Action.
All right. What's up, Joel? What's up, Owen? Good to see you guys.
Yeah, you too.
Well, Deyl, it's always a cool episode where our origin story of meeting was in the ocean surfing. So
That's right.
I'm
That's
excited
right.
about that. Owen and I have a similar sort of start to our relationship. But before we get into all that, we
in the background there.
Oh yeah,
Just to round it out, people on the audio version can't see our sticks, but
Did you guys meet surfing in LA?
No, we met surfing at the IMN conference in Dana Point.
Oh,
Dana
I was
Point?
not invited
Deyl,
to that, Joel.
Deyl came to the Cambio surfing event.
that's right. That's right.
Apparently you didn't want any surfers better than you, so you didn't invite me.
That's exactly what I tried to do, but
Right, don't worry.
Deyl was definitely better than me, so that didn't work.
All
right.
That's always a good way to connect. Wearing
right,
a thin
Deyl.
piece of neoprene. That's all.
Totally. We'll get into all that, but we start our guests off with the same question every time. So, Deyl, how are you taking action to make the world a better place?
All right. All right. Well, raising three beautiful kids, that's probably gonna be my best work. They're gonna make the world a better place. And but no, I joined DLP Capital last year. I'll probably share a little bit more about how I ended up there, but I really believe in the work we do. I love that we invest. I'm a firm believer that business can be one of the biggest forces for good on the planet, and we steward over 13,000 units of multifamily units in our portfolio, in addition to other things. But we invest in the lives of our tenants, and I love that. We do all attainable workforce housing, but beyond just providing that attainable housing, beyond providing jobs through our construction and lending, we really emphasize building thriving communities. It's, the renter population is often said they're a forgotten class, and I think it's about a third of the United States is renters, and generally landlords aren't investing in the lives of their tenants, and so we put resident directors in each of our properties. We do after school programs with Boys and Girls Clubs. We have community libraries. We make an effort to connect people, and we track all these. We track KPIs around loneliness, around how many friends per person people have in the communities. We do financial literacy programs, fitness programs. I could go on, but it's an innovative company, and so long answer to your short question on the kickoff, raising funds for a company I believe in is how I'm changing the world.
That's awesome.
Yeah.
Yeah, that's a great answer. Joel and I, in a past life, worked together at a company called Z&E Capital. We were buying apartment buildings really for the mission to decarbonize them. But I was always interested in the social aspect. I always thought things like, on-site childcare, things like that would boost retention. Do you guys compare sort of your properties to other properties that don't focus on the S, in how tenant retention differs at your property versus others? And is it better?
Well, clarify first. You said focus on the S. What do you mean by that?
Just all the social initiatives that you guys have.
The S and ESG, you're saying.
Yeah.
Yeah. So go ahead, Deyl. Sorry.
Yeah, Joel and I met at an ESG conference, and DLP kind of lives in the S category. But yeah, we do track that. I think the average renter in America stays 14 months. Is the average lease length, or average occupancy. Our tenants, I think it's 29 months. Last we checked.
Big difference.
And growing every month, because a lot of these initiatives we've been rolling out in the last few years. So every month that's going up, and so it's more than double. Our goal is to hit over 3-4 years. Because the residents love living here, and we also track, we have way less deferred maintenance. We have, I think 1,000 5-star Google reviews from residents, which makes a big difference. We spend less in advertising and acquiring our residents. So yeah, people stay where they like, and they take care of the places they like, and they refer their friends to places they like to live. So yeah, there's quite a bit of difference in the marketplace, which translates to the bottom line, and that helps our yields be competitive and compelling. So our investors, we're not concessionary investment company. We're a impact investment company that has best in market returns.
Awesome. Owen, it's really interesting that the way you asked the question, his answer, and then him just saying concessionary. So when we did Z&E Capital, Deyl, like Owen's mentioning, we were going out to impact investors, and Owen used to use quotations, he's like, impact investors are full of shit. That was his line. And that was after a couple of years of trying to explain, hey, we want to decarbonize this multifamily, and we have this innovative way of doing it using clean energy, and that's going to lower the bills for the owner and the tenants. And there's all these great stories, both E and S, in that narrative. But then I remember Owen used to bring this up a lot, in some of the conversations about maybe concessionary capital. If you weren't expecting 18% IRR, Mr. Investor, if you let us give you 12%, we could give on-site on-site childcare. I used to remember Owen bring this up. So all that to be said is going to tee up a question of, Deyl, your role is investor success. You mentioned it, I think, in your answer to the first question, like you're dealing with raising money. So is it like when you're talking to investors, are people coming to invest in DLP? I'm sure this is going to be a varied answer because they believe in the mission you all are trying to do, or is it because your mission actually leads to better returns?
Great question, and it's a mix. I love it when I work with investors that are passionate about what we do and that ask those questions and that want to see our KPIs around resident retention and hearing the stories. But that's not all of our investors. We work with a lot of we also work with a lot of family offices and RIAs where their clients are asking for impact investments that are vetted. But a lot of our investors don't even want to know the impact report. I'd say that's the minority. A lot of people really do appreciate that. But like I said, we're competitive, with the other institutional funds, credit and equity funds like us. And so we're kind of cater to both because we have compelling returns. And I think that's how this space excites me when it doesn't matter. Like I'm often more encouraged when I have someone. I have a big investor in Santa Barbara. It's like, let me be really clear. I could care less about all this impact mumbo jumbo. These returns are great, and here's $1 million. And I'm like, heck yeah, this is scalable. Like, let's go. If we can attract capital because we believe in what we're doing, and capital is required to continue to do what we're doing, and we have a big mission, we have a big goal. I mean, we're really in attainable housing. We want to solve the affordable housing crisis in America, and we can't do it alone. And so we need other partners. Our competitors are really collaborators in this space because there's such a lack of affordable housing in the United States. We need investors, we need capital, but we also need to kind of lead the way and sharpen each other with our competitors, because that's what we need. Is we need capital, we need builders, we need people providing attainable housing in this country.
I was here, that there tends to be pretty strong differences, like generational differences between grandparents, parents, and sort of younger folks in terms of how they prioritize impact. Do you see that firsthand when you're talking to investors? Like, do you get the chance to talk to different generations within the same family or group, and do you see differences?
I do, and you're exactly right. A lot of the younger generation, there's one of the biggest transfers of wealth happening, in 100 years, or I don't know the exact stat, that's happening currently. And so the younger generation that's taking over that capital are asking the questions, and I think I hear it more secondhand from like family offices that are really kind of in place for maybe a decade or two with the family, and now that younger generation is taking over the decision making and the kind of the mission and mandate behind their funds, and they want to know. They're asking the questions: where's this capital going? And not only is it like we don't want to just not do bad, we want to do good. Like we don't want to just avoid maybe tobacco companies and extractive companies, but we want to empower good things that are happening. We want the company that we invest in to actually have a direct impact on that's positive, solving a problem in this world. So seeing that a lot more, which is encouraging.
I can see why this guy's good at his job. I'm like, I want to invest. How do I invest? DLP Capital.
You got a new investor.
Well, Deyl, to that point, I grew up in Pennsylvania. I think we talked about this. I think is your founder from Pennsylvania? Maybe even like similar area to where I'm from.
He is. He grew up there.
Which obviously is where great people come from. So you can tell him I said that.
Obviously.
Well, and maybe you can elaborate a little bit. So like his background, the founding of this company, was it always built on I want to invest in real estate and there's going to be a bigger mission involved in his belief or the wider leadership's belief?
Yeah. Great question. Yeah, our CEO, Don Wenner's a young guy. He's 40. We just had him and his wife and his 3 kids over there through Santa Barbara last month, and just had a wonderful time with them. And he's a man with a vision. He's a man on a mission. And so his story, he grew up His parents were 16 when they had him, and had a lot of siblings, and they moved 30, if you can believe it, 37 times until he finally left for college. So just in stable housing. They're blue collar workers. They were trying to make ends meet. And so incredibly disruptive childhood, moving from school to school to school. And so he left with, as a man on a mission, and went into real estate in his early 20s, and said, I want to dedicate my life, I want to dedicate my career to making sure another generation doesn't have to go through what I went through. So he's not building DLP to sell it. Like he's a man on a mission, and we have a goal of impacting, to positively impact and transform 10 million lives by the funding and building of 5,000 thriving communities. That's kind of our BHAG, big, hairy, audacious goal. And I mean, the way we've grown, we've been on the Forbes, or the Inc. 5,000 fastest growing companies list for 13 years in a row. Wow. He was on Ernst & Young Entrepreneur of the Year this year, just a couple of months ago. So he's a real deal, a really inspiring leader, and leads by example, works harder than anyone else in the firm. And so that just sets the tone. I think we have like 600 or 700 employees now, and we're all like hustling to keep up with Don. So yeah, I love the question. And he's a blue collar, raised in those blue collar, and a good Pennsylvania guy. And
we like to say we built this country from the Lehigh Valley in Pennsylvania.
Yeah, and he wants to keep building the country. So it's fun to be a part of something that is bigger than just delivering returns to investors.
It's very cool.
Yeah.
Well, Owen, I'm sure that resonates with you as a similar entrepreneur, man on a mission. And well, I actually, before I go to you, Owen, I'm going to go back to you, Deyl. So DLP, love the story. Thanks for sharing everything, and happy to bounce back and forth. But so much more to your career, Deyl, and so much more we've learned about you and you've done in the past. I think you mentioned before the call you worked with Bethany Hamilton's company. So I guess maybe take a step back and tell the audience a little more about everything like Deyl brings to the table. I know you've done some coaching. You might still do that, and how you and I met surfing, like your life of action sports and how that plays into your professional perspective. Like, tell us a little bit more about how you see the world beyond DLP.
Ooh, there was a lot there. There was a lot there. So let me pick a lane. I do love adventure. I do love adventures. I do love adventure sports. So I'll go that direction for a sec. And I got to run a 250-kilometer foot race in the Sahara Desert in 2019. Self-supported. You had to carry all your own gear. It was 115 degrees in the day. It's like 4 marathons for 4 days, and then the last day was a double marathon. So gnarly event. I wanted to quit every day and just found my edge, so many times. But it just lit something in me, because it was like this applies to life. Like this what I learned, what I gained, who I became in that process was like I could take that into my marriage. I could take that into my into business, into raising kids, because when you're stretched beyond your limits, it's like these adventure races were like a good little container to learn more about myself and how I operate when I'm just up against it. And that I generally have more than I think I have. So I've gotten to do a couple more of those multi-day adventure races. Have some dreams of doing some other ones coming up, and so yeah, that's kind of woven through my story. It's how I take my kids into age-appropriate adventures as well. I took or at least what I consider age-appropriate. My wife would probably disagree on some. I took my 12-year-old up the Half Dome with another buddy last a couple months ago before it got snowy, and just like tremendous little adventure. We practiced this kind of idea of misogi, of pushing yourself once a year, like way past your limits. And a buddy of mine in Santa Barbara is just kind of like really create a small group that does these big hairy adventures. So yeah, that's been a fun piece of it. But going back just kind of a high level arc, I started, my dad gave me Rich Dad Poor Dad back in college, I graduated from Westmont College here in Santa Barbara, and I was like, I want to go into real estate. That sounds so fun. Excuse me. And started in real estate, worked for a couple different firms here. Started my own firm in '06 or '07, '08, kind of right before the crash. Didn't own anything, thank God, coming into the crash, and was able to start buying and flipping houses. My partner and I flipped about 100 houses in small units, and then started buying multifamily. And so we built a portfolio of multifamily as sponsors, operators, and from LA through Santa Barbara, San Luis Obispo, up kind of greater Sacramento. And then I left in 2019. I maintained ownership in the portfolio. My partner's gone on to do more deals, but I was kind of had the midlife crisis moment. Like, I want to make an impact. I want my life to be more about just making investors money, and it often felt like we won, our investors won, but the tenants lost. Like we would kind of do the normal value add strategy. We would buy something that was neglected. We'd raise the rents, create a lot of value to our investors, and then, but a lot of people were displaced, and didn't always work out well for our tenants. So I felt like I had to leave real estate to go make an impact, and that was kind of where I went on to do several different ventures over the last 5 or 6 years. But one was teaching entrepreneurship at Westmont College, where we talked about redemptive entrepreneurship, impact investing, and that was where like my wheels were turning. Like, could real estate actually potentially be the place that I could have the most impact? And so a case study of mine was DLP Capital. I hadn't even met these guys, and I'm talking about, here's this best-in-class $5 billion real estate company that's actually positively impacting the lives of their tenants. And so then fast forward, I met these guys and just got swept up in the vision. Started last year. So long answer to your question, but it's your fault because you asked too many questions baked into one.
Oh, good. We're here to learn from you. It's all good.
No, yeah, it's so interesting because when I'll never forget one of the first properties I toured in DFW when Joel and I were at ZNE. It was called Mesquite at Tradewinds. It was like a 400 unit property. I was touring it with the broker who was selling it for the third time in 10 years.
Wow.
So sell it to a group, raise rents, sell it to a new group, raise rents, sell it to a new group, raise rents. And I always thought it was so interesting that the multifamily industry is always talking about everything that they're doing to solve the affordability crisis, but they're never talking about what they're doing to contribute to it. Right. And so at ZNE, we were trying to take the edge off of the affordability crisis with on-site solar by bringing down utility bills. And now it's awesome to hear what you're doing on the social side to try and help with all the social engagement that you're doing and kind of boosting retention. Why aren't more real estate companies doing that? And I know that's a hard question to ask, but I feel like once you see that it works, it's such a, like, you have an addiction to doing more because you're like, we can make money and have a positive impact. But so many real estate companies just do the same old, like, boring value add strategy.
Yeah, that's a great question. And I love what you guys do because it's, and I'll answer your question, but kind of tee it up by saying, like, you guys are thinking long term. You guys aren't thinking short term, transactional. You're delivering a value that's going to pay out for years and years, maybe for a generation to come. And when we have that short term perspective, it can be extractive and it can be transactional, and we're not thinking, what are the long term ramifications, because we're trying to hit yield. And that's embedded in the investment world, and so I think what we can do and what we do is we have an evergreen fund, so we're able to think long term, where most funds, many funds have a 4-year, 5 years, they got a wrap up date, so they're transacting, and they know in that life cycle they got to raise rents this high and then exit and make a good yield. And with our Evergreen fund, we're able to really curate it for long-term holds. Like we want to buy properties that we want to steward for a long time, for a lot of years. We'll exit properties, that maybe that aren't a great fit, or we don't love that geographic location as much as we thought, or whatever. But for the most part, we're buying to hold, and we're buying to steward and build relationships. We don't want to just be transactive. So the evergreen nature of our funds is a little bit more conducive to that. And
Does that make it harder for your job raising money from investors on an evergreen structure as opposed to like a 5-year fund or 7-year fund?
I would say no. I can't. I've never raised money for the alternative, other than when I was raising money for my own company. They were all standalone. Like, hey, we found this deal off market. We can buy it for a discount, and that was fairly easy to raise money for like one deal. But I think what we're selling now is diversification. We have 53 assets, and we don't have to sell. If another massive recession happens, we don't have to sell. We can manage cash flow, hang in there, and not sell until it's an opportune time to sell. So I think from a risk mitigation standpoint, it's fairly it's very compelling. We have 17.5% yield since inception on our housing fund, the multifamily fund. So that's in a lot of ways we're selling a product that's pretty easy to sell.
Yeah.
But when I talk about attainable housing, I just wanted to touch on this. We're not affordable housing, like capital A affordable. We don't do LIHTC or deed restricted or government assistance. We do what we call attainable housing, and we benchmark that by being 30% of the AMI or below. So the rents across our portfolio, whether we own it, whether we're building it, or whether we're lending to builders to build it, we self-mandate that we're below 30% of the AMI. And like in our multifamily portfolio, I think we're about 23% of the area median income. So if the area median income is $100,000, rent can't be over 30 for those residents annually. And so that's kind of what is sustainable, especially for blue collar kind of workforce housing. So that's how we define attainable housing.
I think you guys are like way more legit than a lot of other groups that we came across again in our Z&E days. A lot of people were using 80% AMI as quote unquote affordable. Mm-hmm. And when you ran the calcs, like that was market rate. They were just calling it affordable because it fell into that bucket of being 80% AMI or under. But I mean, 30% is actually affordable. Yeah.
And we're like, we call it naturally occurring affordable housing. So we're not artificially pulling those down, but now we're not on the corner of Main and Main. We're in secondary and tertiary markets, over 100,000 population, growing income, but those are still places where we can rent to firefighters, where we can rent to police, where we can rent to secretaries, and they can afford rent and to send their kids to school and to pay for medical bills when they pop up and not be way behind.
Yeah, that's awesome.
Well, Deyl, this has been fascinating, inspiring. I want to be an investor in DLP. I want to continue to surf together. Owen and I, we met in grad school at Santa Barbara. I think we told you this at the Bren School. Yeah. So anytime you want to invite us back to Santa Barbara to go surfing, we're happy to.
Get on the boat.
But we're going to wrap up on the one last question, which I'm excited for your answer. We always end our interviews with the same question for every guest. So, we usually tend to focus on environmental sustainability type of topics here. And in that world, there's sometimes people in our field focus too much on the negative side of the press and the coverage and what folks believe is not enough progress on protecting the environment. But we like to focus on optimism here and especially end the show on a high note. So, Deyl, take it any direction you want. But what gives you hope for the future?
I think that younger generation, I think they're starting to see, to connect the dots of like longer term thinking and stewardship. And I got about 5 or 6 years ago, I got certified in permaculture, which was a whole heck of a lot of fun, and that sent me into like kind of regenerative agriculture world, and a lot of the conversations happen in those circles that are influenced by indigenous thinking, which I love. Where it's like 7-generation thinking, and planting a tree for that you'll never enjoy the shade of. And so I think what gives me hope is this younger generation, like my kids' generation, is starting to connect those dots that we can't keep extracting. We can't keep borrowing from tomorrow to live a better life today. That actually investing in the future, investing and utilizing less for ourselves, and thinking, just like challenging ourselves to think harder, because sometimes it just takes more creativity and more effort to create a model that's actually not extractive and that's regenerative or redemptive. So I think that's what gives me hope, is that I think there's some light bulbs going off in some younger heads, which is encouraging.
Awesome stuff. Any last thoughts, Owen?
No, I think it's been a great great podcast. Would love to surf with you guys.
Heck yeah.
Talking real estate, impact, my 2 favorite things.
Let's do it.
Awesome. Well, Deyl, before we wrap up, anything to plug? You want people, if we got family offices out there that want to invest, where do they go?
Yeah,
find Deyl on
absolutely.
LinkedIn. You go to the website.
Go to DLP Capital. I'll leave some information with you guys, and people can get in touch. We love to serve people that are like-minded and that are interested in making an impact in the things that we want to make impact in. So find us dlpcapital.com, and you can find me on the socials, and we'll get out in the water soon, guys. Look forward to it.
Sounds
Love
good.
it. Well, thank you,
right.
Deyl. Thank you, Owen. Thank you to our audience for joining. You can also find Owen and I on LinkedIn, usually actively antagonizing the more talk, more whining sustainability crowd. You can find this podcast and more great content at letstalkmoreaction.com. If you like the podcast, please subscribe, like, and share with your friends. And until next time, we encourage you to ask yourself, what are you doing to take action to make the world a better place?